first tick on the index is a loss of about 90 odd points, so not looking good. That's on the Nifty.
The Nifty has snapped a 9-day winning streak.
Mid-cap side of things, they are outperforming the index.
That was basically when the market hit 17,650, the support we've been talking about since the morning. And then we've not traded below that level. There's a good close, a decent close. We're down 125, but up 100 plus points from the day's low, which was made early on at 10 this morning. The picture looked very different as compared to what things are at now.
Hello and welcome to Markets Today, the show we track around 6 hours of the day's trading action in just 5 top headlines. I'm Nigel D'Souza. Let's get straight to the headlines for the day. The Nifty and the sensex fall over 0.5% as IT stocks see heavy selling. Financials buck the trend. The Nifty Bank gains for the 4th straight day in a row. The mid-caps do pretty well. Infosys slumps 15% intraday, marking the highest fall since October 2019. That's post a dismal showing in its 4th quarter. However, over 70% brokerages are still bullish on the stock, while 15% give them a sell recommendation, the highest since September 2017. HDFC Bank slips as it misses estimates in Q4. Near-term impacts of branch expansion and liability mobilization drain in profitability. However, asset quality improves and margins remain stable. TV18 and Network 18 gain after Viacom 18 closes the deal with Bodhi Tree Systems with a sale of 5.7% equity by Oppenheimer in Z Entertainment based on that stock. Jubilant Ingrevia gains after commissioning a new plant in Gujarat. PCBL also soars on incorporating a wholly owned subsidiary. Meanwhile, Cumin slips on a downgrade coming in from Buffer Securities. Well, here's what we have lined up on the show for you. In Market Opinion, we'll get you what Manishi Roy Chowdhury of BNP Paribas had to say. And in Corporate Voices, we have Salil Parekh of Infosys who will be joining in. Well, starting with the day's market action there, the sensex and the Nifty snapped its 9-day winning streak to fall over 0.5%. Weakness in IT stocks, well, that weighed on sentiment. However, financials bucked the trend. The Nifty Bank saw gains for the 4th straight session, while mid-caps outperformed as well. Prashant joins us to run us through those details. Prashant?
Well, the markets were bracing themselves for a large cut on the back of very poor earnings from Infosys, which came last Thursday. And we got exactly that, a very sharp cut right at the word go. The Nifty made the day's lowest point, about 200 points down on the day, exactly at 10 a.m. But after 10 a.m., it was a steady incline higher. The market kept recovering, kept getting better over the next many hours, all the way into close at 3:30. So, I mean, this looks very different. The close finally of the Nifty looks very different as compared to what we had earlier in the day. The IT index, of course, was the big loser, and that was the reason why, markets went for a toss early on. Infosys, doing bulk of the damage there. I'll get to stocks in a bit. Bank Nifty, as compared to the Nifty, has looked much better the last many weeks, and that continued today as well. The index ending in far better shape as compared to the Nifty or any other indices. Sectorally, as I said, banks were the flavor, and within banks, it was PSU Bank Index, which was up and about. The FMCG index did very well, and you had the real estate space, which held out very well. IT stocks, which lost the most, it's a mix of large and mid-cap names. Infosys, L&T Mindtree, Persistent, Tech Mahindra, Coforge, HCL Tech are some of the names which were the biggest losers. Gainers were from the FMCG pack, as I said. Nestle was a big one, prominent. Power Grid and State Bank of India were some of the others which did quite okay. Broader markets, advanced decline was almost exactly 1:1. The gainers coming through in the broader markets like RBL Bank, Anupam Rasayan, Raymond, CSB Bank, Ethos, and a bunch more. There were losers outside of IT as well, but far and few in between. Bulk of the losses in the IT services space. It's not a bad day compared to what it looked like early on in the first hour of trade. Some levels I'll leave you with. The crucial support today, which was held, was 17,650. We've closed above that level. The low today is 17,574, which going forward should be defended. And the resistance, very near-term resistance, stands at 17,857. which is a retracement of the entire fall. Back to you.
Thanks a lot for that, Prashant. Well, in market opinion, Manishi Ray Chaudhary of BNP Paribas has reiterated its neutral stance on the Indian markets. He also lays out his top picks from the auto space.
It's, I think, no surprise that the market in the short term is underperforming and will possibly continue to underperform its Asian peers, going forward. And that is one of the reasons why in our most recent Asian model portfolio reshuffling, we did not upgrade India to an overweight. We still retain a neutral stance, despite the fact that Indian relative valuations have actually declined quite a bit. We had lightened our positions in the auto space in late 2022 on early December, when we downgraded India to a neutral from an overweight stance. Autos was one of the sectors that we lightened our positions in, and we actually continue to maintain that stance. We still prefer the four-wheelers, the passenger vehicles, compared to the two-wheelers. We have no position in the two-wheelers right now.
Well, moving on to the second headline now. Heavy selling in IT stocks saw the Nifty IT index slip 5%. Infosys, well, that was a key culprit. It was down 15% intraday trade. That was the biggest fall that we've seen since 2019. This posts their dismal showing in Q4. It had a rub-off impact because you had Tech Mahindra, HCL Tech, and other mid-cap IT stocks. They were down anything between 2 to around 5%. Meanwhile, 70% of brokerages remain bullish on Infosys, while 15% have given them a sell recommendation. Rima joins us to run us through a quick analysis on those numbers. Rima?
Despite a dismal Q4 performance and the stock being lower by nearly 10%, 70% of the brokerages are still bullish on Infosys. Out of the 46 brokerages tracked by Bloomberg, 32 of them have a positive view on Infosys. 7 of them are neutral and 7 of them are negative. So let me run you through each of them. So on the bullish side, you've got CLSA, which has downgraded the stock to an outperform from a buy. The target price now stands at 1550. Kotak Institutional Equities has a buy call, though the target price has been brought down to 1470 after a 6 to 7% EPS cut. They're saying that Q1 will be muted, expect a recovery only in the second half. Morgan Stanley also bullish on Infosys overweight call. They are worried about the margin guidance band being lowered, and they've cut the target price to 1475. On the neutral side, I've got Macquarie, where the target price is at 1400. They're saying the guidance miss after raising it in January raises the possibility of a derating. Nomura is also neutral on the stock after an 8 to 9% cut and a downgrade. And JP Morgan is negative on Infosys. They have cut it down to underweight. Their target price is below where the stock is currently quoting at 1200. Uninspiring commentary. Ambitious guidance post the sharp miss is what they say.
Thanks a lot for that, Rima. Well, Salil Parekh, the CEO of Infosys, believes that the company's performance was impacted due to client ramp downs in telecom, high-tech, retail and financial services. He also lays out his view on the guidance. Let's hear him out.
For the quarter Q4, what we saw is during the quarter, there were some clients where we saw ramp downs, and then there were some areas where we saw one-time situations. The bulk of the impact in the quarter was from the ramp downs that we saw during the quarter. There are two aspects to it. So one, on the ramp downs, there have been with some clients in the telco sector, in the high-tech sector, in retail, and in financial services, in mortgages, asset management and investment banking. So those ramp downs, we saw some stabilization in March, but the demand environment is uncertain. The way we've constructed the guidance is based on what is the large deal and overall wins we've had in the year and also in the quarter. And then a lot of our work, which is multi-year work, that carries through. So based on that, we've also expanded instead of a 2-point guidance, which we normally give, we've done for a 3-point guidance, more with a view that the environment is uncertain given what we saw in Q4.
Well, that was Mr. Salil Parekh, but we also got some brokerage reactions, and a couple of experts who joined us on the show to give us their reaction to Infosys' Results, we had Sumit Jain of ICICI Securities, who's still bullish on the stock, while Manishi Ray Chaudhary of BNP Paribas says that one must watch the deal wins from IT companies in the coming quarters. Let's hear them out.
We believe that the stock will be trading at around 19 times 1 year forward multiple, and that will be closer to their last 14-year average PE multiple, 1 year forward PE multiple. And in the last 14 years, other than GFC and the COVID crisis period, there were only a couple of years where Infosys has actually traded at these multiples because of the slower growth environment. So I guess clearly we believe this is, if people are looking for value stocks, then definitely after today's correction, it will give a very good opportunity to buy. Having said that, over next 1.5 months, there could be a bit of a consolidation in terms of a slight derating of Infy over TCS, given that TCS had a better earning growth in this quarter. But this is where I think the June quarter commentary from the companies 2.5 months down the line will be very, very important.
There have been sort of, what should I say? What's the right word here? Unprecedented or, unexpected ramp downs by clients, as we have seen in some of the IT biggies results. And, and that's not really good news as far as visibility about earnings are concerned. It's only over the next 1 or 2 quarters when we get to hear more about the deal wins of the IT companies that we would have some more certainty. If one has a 2 to 3 year time frame, then we do like the IT companies for a couple of reasons. Despite the concern about recession in the United States, we are seeing relatively strong deal wins from the IT companies.
Well, moving to the third headline today, HDFC Bank slipped over 1.5% after missing the street expectations for the fourth quarter. The profits were impacted on the back of near-term branch expansion and liability mobilization. However, asset quality and margins remain stable. Abhishek Kothari joins us to run us through a quick analysis on those numbers. Abhishek?
Well, the bank is building on for future traction, so the cost is being incurred right now. However, asset quality and the quality of the portfolio remains impeccable. So what has worked in this quarter is that despite rising cost of funds, the net interest margin has remained stable, and NII growth on a YOY basis is pretty strong at 23-24%. The slippage ratio of 1.2% is perhaps the lowest in last 6 quarters and second lowest in last 31 quarters. So that helps the asset quality remaining stable, with gross NPA ratio being the lowest in last 9 quarters. ROA remains robust, that is return on asset. It remains at 2.1%, with PCR or provision coverage ratio being the best in last 9 quarters, above 75%. So RWA to advances ratio is at the lowest in 4 quarters and the second lowest in 17 quarters or more, which suggests that, the book is being built in a secured manner with lower risk. Restructured book at mere 0.3% is the lowest in last 10 quarters, and HDB Financial has reported strong numbers. The PAT is the highest quarterly PAT that they have seen, with asset quality being the best in last 9 quarters. What has not worked in the result is the operating efficiency, given the fact that OPEX remains elevated due to the branch expansion that they have taken. So the cost to income ratio is at 42%, perhaps the highest that you are seeing in last 25 quarters. And CASA growth rate, or the low cost deposit growth rate, is the lowest in last 3 quarters. For third quarter in a row, you are seeing CASA growth being below the overall deposit growth. This is a trend seen across industry peers as well. Corporate loan growth YOY is below the overall loan growth, and in terms of PNL, NII and PAT is below our poll. Back to you.
All right, thanks a lot for that, Abhishek. Well, let's get you some more stock-specific news then. Cummins was down more than 3% after Bank of America Securities revised its rating on the stock to underperform. Well, Nimesh joins us to run us through what the brokerage report stated and what are the key reasons why BofA downgraded the stock. Nimesh?
Well, Cummins ended at day's low and was one of the biggest losers on the back of a downgrade from BofA Securities. Today, they've downgraded the stock to underperform from buy, and they've cut the target price to 1434 versus 1758 earlier. Now, BofA has downgraded the stock on 4 key reasons. The first reason being 50% of price hike on updated CPCB plus 4 norms could adversely impact the sales from Q1 of FY24. That's the first big key reason. The second is FY24 and FY25 EPS growth estimates of 17% and 15% are baked in the pre-buys, and at current valuations there is a limited room for upside. So that's the second reason. Third, exports. Now one third of the sales for Cummins comes from exports, and there could be some disappointments on the back of global slowdown. And the last reason is bulk of the margin expansion for Cummins. They saw almost 560 basis points of margin expansions in the last 4 to 6 quarters, and that seems to be now behind and not going to get repeated. So in back of these 4 reasons, BofA has downgraded the stock. They've cut the EPS estimates for FY24 and FY25 by 2%, but they've sharply cut the multiples as well from 30 times earlier to now 25 times, and hence they've downgraded the stock to underperform, and they've cut the target price in Cummins to 1434 versus 1758 earlier. Back to you.
Thanks, Nimesh, for that. But we'll have to slip into a short break on that note. We'll come back in a jiffy and we'll run you through the remainder of the headlines that we're tracking for you. Welcome back. You're still with us on Markets Today. Well, as promised, let's run you through the remainder of the headlines that we're tracking for you. Which brings us to the fourth headline today. Zee Entertainment was down close to 2% after a large block trade. Oppenheimer sold close to 5.7% equity in the firm. That was worth close to around 1,100 crores odd. Vivek Iyer, he gave us that heads up earlier. He joins us to fill us in with more details on that front. Vivek?
Well, absolutely. Today during market hours, you actually saw a very large block deal of over 5.6% stake, that exchanged hands as far as Zee Entertainment was concerned. So now, yesterday we did have access to the term sheet of the likely block deal, and we understand that Oppenheimer has completely exited its 5.65% stake, via this particular block deal. We understand that, the floor price for this particular block deal was at around 200 rupees a share, but we also understand that, the actual deal took place at a price slightly higher than that. So the total offer size, the total block that has exchanged hands is over 1,130 crore. Interesting to see the list of buyers in today's, deal that will be uploaded onto the exchanges post-market hours. But a large block deal, and it's a clean-out trade as far as Oppenheimer is concerned.
Got that, Vivek. Thanks for that. Well, let's move on then. TV18 and Network 18, both of them gained between 1 to around 4% in trade. This after news that Viacom 18 has completed its partnership agreement with Bodhi Tree and Paramount Global. Surbhi Sutaria, she's tracking that. She joins us to fill us in with the contours of that deal. Surbhi?
Thanks for that. So Viacom18, a subsidiary of TV18, over the weekend has announced the completion of the strategic partnership with Bodhichi and Paramount Global. Now, post this deal, Viacom18 will own the JioCinema OTT platform. The completion of this deal was on expected lines. However, there are two interesting aspects to this. First, some of the contours of the deal have changed. Initially, out of the 15,145 crores which was to be invested, Bodhichi was going to contribute 13,500 crores and the remaining portion was going to be contributed by Reliance. But now, Bodhichi is contributing 4,300 odd crores and the majority is going to be invested by Reliance. Now, post the deal, on a fully diluted basis, Reliance's stake in Viacom18 will be 60 odd %, TV18 will hold 13.5%, and both Bodhichi and Paramount will hold 13% stake each. The second interesting bit is the valuation bit. Based on Bodhichi's investment, the suggested valuation of Viacom18 is close to 33,000 crores. TV18's share in this would be close to 4,450 odd crores, suggesting that the residual value of TV18 business is close to 700 crores when you compare it to their current market cap, giving it a significant valuation upside from their current levels.
Thanks a lot for that, Surbhi. Well, which brings us to the fifth headline today. In stocks and news, you're jubilant in Ingredient. It gained closer around 3.5% after commissioning a new plant in Gujarat. PCBL as well closed in the green on incorporating a wholly owned subsidiary, that's PCBL Europe. And Camlin Fine also surged more than 5% post the launch of an open offer. Sonal Bhutra joins us to give us a wrap on all those stocks. Sonal?
That's right. Three chemical names which are on my radar today. Let me start with Camlin Fine Sciences, because Infinity Holdings and promoter Ashish Dandekar, they have launched an open offer for a 26% stake in the company at 160 rupees per share. Now, Infinity Holdings is a major shareholder in the company. The last known shareholding was around 23.02% stake. Back in 2020, they had bought a majority stake in the company, and this was via warrant conversion. Promoter Ashish Dandekar held a 9.44% stake in Camlin Fine as of December 2022. Totally, the promoters held around 17.5% stake. And once the open offer actually goes through, Infinity Holdings, Amphima and we will be classified as co-promoters of the company as well. So that is the kind of change that we'll see because of this open offer. The offer document also says that assuming there is full acceptance of this open offer, these three entities will hold around 55.76% stake in the company. The other stock that I'm watching out for is Jubilant Ingrevia. They reported to the exchanges that they've commissioned new acetic anhydride plant at Bharuch with a total capacity of 60,000 metric tons. This takes the total capacity of this products to 210,000 metric tons. The company says this will help them increase the presence globally. It will also help them cater to new domestic clients and will be able to expand to downstream industries like pharma, agrochemicals, food, vitamins, electronics, dyes, industries, etc. The third one is PCBL. They've incorporated wholly owned subsidiary in the name of PCBL Europe, and what this unit will do is research and development, manufacturing, marketing and trading of specialty chemicals. Remember, PCBL is erstwhile Philip Carbon Black, which is into manufacturing of carbon black, which is used in manufacturing of tires. There's also another report which suggests that the company has announced commercial production of their carbon black facility at Tamil Nadu plant. Initial manufacturing capacity is 63,000 tons per annum. And at peak, they'll be able to produce 1,47,000 tons per annum, which they expect to do in this year itself. The total cost of this project is 650 crore rupees.
Thanks for giving us an update on the chemical space, Sonal. But before we wind down, let's shift focus to the commodity space. Crude prices remain elevated at around $85 per barrel. It has rallied close to around 8% in April itself and continues to trade near one-month highs. Gold prices as well have inched up a little bit after a 2% decline that we saw towards the end of last week. Manisha Gupta joins us to give us a roundup of what's going on in the commodity space. Manisha?
Well, it's been a good start of the week for commodities as markets look at 87% of a probability of a 25 basis point rate hike in the US Fed meeting in the month of May. In the meanwhile, you've seen Singapore joining Canada, Australia, India and South Korea in keeping the monetary policy unchanged, and that clearly seems to be supportive. Even as the dollar index is trading slightly in the positive, the markets have seen a big run-up coming in. So when you look at the metal prices, the weakness in US dollar has been supportive here. Copper prices, for example, are trading at a 3-week highs. And between copper, zinc, aluminum, we have seen the prices gain between 3 to 3.5% in last 6 or 7 trading sessions. The best of the gains come in for nickel, which is up 6% for the last 1 week itself. Good buying is also what's seen in case of the crude oil prices. That one is trading at a 1-month highs. The markets are reading into the Chinese import data for the month of March, where the crude imports jumped up by nearly 22.5%. And then IEA statement, which says that it is going to be record demand growth in this year to the tune of 2 million barrels per day. That could lead to 101.4 million barrels per day of a global demand. And then it is also about the oil exports from Iraq to Turkey, which have been halted for last 3 weeks now, and that continues to add premium to the prices. What the street is watching out now for is the Chinese first quarter GDP numbers. That data comes in tomorrow, and that would set the near-term direction for many of these commodities, given the fact that China is still the major producer and consumer for many of these commodities.
Got that. Thanks for that, Manisha. Well, on that note, though, we'll wrap up on this edition of Markets Today. Thanks so much for watching.